Hello everybody, Alex Petrescu here. Welcome to my Finance and Accounting Education channel. Today we talk about taxing the unrealized capital gains. Why we talk about this? Because yesterday, Friday, was the 24th of September 2021. This happened. Let's just watch it and we will come back later.
Ken.
Thank you, Mr. President. When you met with congressional leaders this week, you told them to try to find a number less than $3.5 trillion on the reconciliation package that they could live with. What is that top line number in your mind as you deliberate these considerations? And then separately, you mentioned how you're going to pay for some of these provisions. Senator Wyden has a proposal on annual taxes on billionaires' unrealized gains. Is that a proposal that you support?
Yes, I do. Look, I support a lot of these proposals. We don't need all the things I support to pay for this, but I do support that. Look, if you file with a W-2 form, the IRS has access to your bank account, and your bank tells you how much you made, what you have in there, and they estimate your tax. Well, if you have no income, if you have no earned income, and it's all investment income, it's hard to figure out what the heck you have. And that's why we have to, and I know some people don't like this, that's why we have to rehire some IRS agents.
Now we have seen that, and I just want to say from the beginning that I'm not an American citizen. I don't live in America, so I couldn't care less about the American politics, about Joe Biden, about Donald Trump, about Democrats or Republicans, and so on and so forth. The only problem is that this is happening in America, and a lot of things that happen in America tend to spread around the world, especially in the free world, as we like to call it, and they also like to call it, the Americans. And I still have the feeling that I live in the free world here in Europe. And to be honest, I wouldn't like to see something like that spreading out around the world and having that also here in Austria or in any other European countries. So let's say that if you don't know, Joe Biden came into power after defeating Donald J. Trump. At the beginning of this year, he was stated as President of the United States, and his campaign was, okay, the one from Donald Trump was to make America great again. The one from Joe Biden was building back better. But judging from what he just said, and you have already seen in this short video from the press conference from yesterday, he wants to build back better by taking money the people don't have, in my opinion. Let's just jump right in. So, somewhere, let's say, when Donald Trump was elected first time, and he was running against Hillary Clinton. Hillary Clinton said that maybe we should tax the investors that stay invested for more than 1 year less or not at all, and we should only tax the ones that are investing on short term, so basically the ones that are making speculations in the markets and so on and so forth. So that happened only 5-6 years ago. And this is why I'm saying that at some point we went from everybody saying we need more investors on stock exchanges to finance the real economy, to finance the companies, to have investors for these IPOs and secondary public offerings and so on and so forth, that people should invest to build their wealth, and the stocks are, so investing in the stock markets, buying shares from the companies is a very good alternative for building your wealth. And this idea that maybe we should, I think, also in Austria before 2010, 2011, the long-term capital gains were absolutely not taxed, and then they switched. And we went from this idea in which the investors were sought after and they were seen as something very important for developing the economy and the markets and so on and so forth. We went to the rich are getting richer without paying any tax, and they are doing this through stock exchanges. The super rich companies, you name it, the 5 biggest in the United States, everybody knows them: Amazon, Microsoft, Alphabet, so Google, Apple, and Amazon. The super rich people that own these companies and these companies are worth billions, and these very rich people are paying absolutely no taxes, up to the point that in which Bernie Sanders, a Democratic or a Democrat party member, said that Elon Musk and Jeff Bezos, or Jeffrey Bezos, own more wealth than the bottom 40% of the people in the country, in the United States. So somehow we turn the investors into villains that are stealing the money of the other people, or something like that. However, the reality is that I have here a graph from Pew Research. The reality is that 52% of the families in the United States are having a stock portfolio. So it's not only the very rich people that are in the stock market. Unfortunately, there were 66% of the families in 2007 that were invested. That's very bad. Such initiatives as taxing the unrealized capital gains are sure not helping more people and more families to get on stock markets and investing. These 52% of the families own a median $40,000 portfolio, so it's not that much. What does median mean, and why aren't we using an average? An average will mean taking all the sums of all portfolios and dividing by the number of owners, and it will somehow be biased because, of course, there are a few people that are very, very rich. The median is just the individual which is exactly on this distribution, which is exactly in the middle, so, or the family which is exactly in the middle. This data about the 52% of the families owning stocks in United States is also from the financialsamurai.com. You can find the information there. The S&P, so the S&P 500, the largest, let's say, index from the New York Stock Exchange, delivered last year, so in 2020, even in the pandemic conditions, an 80.40% total growth. That means dividends, and they are already taxed. I haven't found very fast how much was dividends and how much was price growth. The companies have different policies. Some of them reinvest the profits, some of them distribute a lot of the profits as dividends. So there are many particular situations. However, the idea is that the median family gained, if they had this $40,000, gained $7,360, so times 18.40%. If they have an income below 40,400 for single individuals, or double of that for families, they would pay zero. The story here is that they actually need to have under 33,000, because the 7,360 gain from capital will have to be added to their income, of course, in this scheme of taxing the, let's say, the unrealized capital gains. If they would be above this 40,400 or double for families, they will have to pay 15%, which means $1,150. So in order to pay for this tax, according to the scheme that some Democrats politicians are thinking, they will either have to sell the shares, so they will have to sell from their portfolio, or pay it from the regular income, so from the salaries or whatever kind of other rental income that they have. This scheme looks very good for the very poor ones, although I'm not sure that many of the families earning under 40,400 have a stock portfolio, but it also looks very bad for the median income brackets. The median income bracket in the United States is between 40,400 and $446,000. So after 446,000, you are already rich considered. But the idea is that any economy should want to have as many people as possible in this median bracket, so in this middle, so-called middle class, between 40,400 and 446,000, and not very poor that they already probably don't have, they are not in this 52% that have stocks portfolio, or just few of them, and it won't help them anyway because they won't pay any taxes anyway. So the problem with is that when we talk about investing, so the basics of investing is what we are telling them in these classes or in these let's say advices and so on and so forth. We are telling them that they haven't lost or gained any money until they have sold their position. So until you have, let's say, you bought some shares and you are going to see these fluctuations with plus and minus, so the greens and the reds on a daily basis, on a weekly basis, monthly, yearly, and so on and so forth. But you haven't made a gain or a loss until you have sold that. And this is the base of advice of telling them not to panic when they see red and not to start selling, because that's basically acknowledging your loss, which might turn the stock price might turn back on growth, and you might see the red going away in the meantime. What is the government actually coming and telling is that they want to tax your green at some point, probably at the year end. I don't know how this could work. Even if you haven't sold. That's why the government is trying to somehow contradict the principles of investing. We are telling the people that they haven't really made a gain or a loss until they have sold, until they have vested out of their investment, but the government tells them otherwise, that they have made a gain even if they still have the position. The dividends is something else, so the dividends need to be taxed, and it's okay like that. The story is that if they do this when the portfolio is in green and they want to tax you, it's normal to give you a tax credit also when the portfolio is red. Yeah, so that's the it cannot go only in one direction. Yeah. The problem with the negative returns, and I have here the S&P 500 total returns per year since 1994. We had 2000, 2001, 2002. I assume that's because of the dot-com bubble. You have minuses. You had in 2008 a minus 37%. In 2018 a minus 4.38. I told you in 2020, surprisingly, the S&P stayed on a positive side. The problem with the tax credit is that at least in 2008 they tend to overlap with the economic downturn. So when the stock market crashes, usually the entire economy is in a big to-do. And the idea is, what should then the government do? Focus on helping the economy at large, all the stimulus that they are giving and so on and so forth, or they should give tax credits to the villains on the stock exchanges in years like 2008 or in 2018. Let's say that the economy in 2018 was not that bad. And taxing, so somehow taking the benefit from taxing the positive years on stock exchange will turn against the governments in the bad years. Another problem is that it has the potential to reduce the growth in the markets, to dilute to somehow force them to decelerate, because probably many of the investors will have to sell a part of their shares in order to pay these taxes, and selling a lot and at the same time, probably when the taxes are due, will probably reduce also the growth in the market. So this will also not help that much. Then if we are talking about the rich, we talked already about the very poor ones, we talked about the middle class. Let's talk a little bit about the rich, although I'm quite sure that nobody really cares about them. Let's be clear, they are paying taxes on salaries, so any type of other income that they have, on bonuses, if they get some bonuses for performance in their companies, CEOs or whatever they are doing there, dividends, they are paying taxes for sure. On any other realized capital gains, like if they really sell shares and so on and so forth. These companies that grew a lot and they drove the attention of politicians like Amazon and Tesla and so on, they don't really give dividends and they grow a lot because of reinvesting. Yeah, and then the question is, if we start taxing the unrealized capital gains, why not tax also the dividends which are not distributed, so the retained earnings? If we do that, then the investments of the companies will also get reduced by the same percentage. So if we tax that with 20%, the investments of the companies will get reduced by 20%. However, the politicians like a lot the investments of the large companies because they create jobs and they get more taxes, and for the general public who's voting them, it's very helpful, and at least this should pose a problem for them, because this sort of taxation on unrealized capital gains has the potential to slow down investments of the real companies that are creating real jobs. And of course, since we have started about to talk about unrealized capital gains, why aren't we talking about taxing the home price increases? Yeah, so let's say that in the real estate there is an ever inflation and the values of houses is growing most of the times, and why not tax that? Yeah, even if the people are not selling their houses every year just to see the growth in their bank account. Why not tax that? Why not tax collections, art, antiques, you name it? If you have some collection cars and they went up in value, why not tax that? And so on and so forth. So there is absolutely no limitations once we open this door to taxing money that is not really there. There is absolutely no point of saying where to stop exactly with this demeanor. And to talk even more, the crazy ups and downs in the tax basis. So, because we mentioned Jeffrey Bezos and Elon Musk, I have here from CNBC what happened in 2020. It says that Musk added a whooping 140 billions to his net worth in 2020, bringing the total to 167 billions. That means that he had already 27 billions before. In this case, he should have paid 140 billions times 20%, 20, because for sure it's above the 446,000 threshold, 28 billions. Then the question is, in this case, is the government expecting that, is that a realistic expectation that the investor, so Elon Musk in this case, is selling 20% of his portfolio in order to pay these taxes? Nobody's thinking what will happen, and I said that this has the potential of reducing the growth on stock exchanges if somebody suddenly dumps 28 billions of shares of Tesla in the market. We assume that somehow the market will understand this, because they will know that Elon Musk needs to pay his taxes, and there will be no panic as in why is he selling his shares. Maybe he doesn't trust his own company and panic and what is going on, and this kind of things, like thinking that it's insider trading and maybe he knows something bad for the company is coming and he's just looking to get rid of shares. So we think that maybe the markets will not react in this direction because they know that he only needs to pay his taxes. Then the expectation is that once they sell these shares, the investors might lose the control of their companies. Yeah, maybe they have controlling interest in the companies, and all of a sudden they will become in order just to in their own companies just to pay the taxes. I mean, it's crazy. And to make things even more funnier, we have from 2021 an article that Elon Musk lost in 4 days. It says Elon Musk set record last year for one of the fastest streaks of wealth accumulation in history, so the 140 billion. But the Tesla Inc. chief executive has lost, so that's in 2021 now, 27 billion since Monday as shares of the auto market tumbled. So that's from livemint.com. So 27 billion times 20% would be 5.4 billion. So he will have to go to Mr. Biden, or actually not to the Secretary of Treasury, to Janet Yellen, and tell, okay, lady, please now give me back my 5.4 billions because the value of my shares has dropped and I need tax credit right away, or something like that. You see, it's very crazy, this concept of paying for something which you don't own. The idea is that people like Bernie Sanders and probably Mr. Biden as well, without any financial education and not knowing what the hell is going on, they are just going in this populist direction. Most of the normal people, of the poor people, when they hear that Elon Musk has 167 billions, they think that maybe when he's looking in his bank's account, on his bank statement, he sees $167,000, so comma 000, comma 000, comma 00, 0.00 or something like that, or maybe he has 167 billion in his pillow or in his mattress or in his safe somewhere, or they think in this direction. And I'm quite sure Mr. Biden, when he's getting his salary, he's keeping his money in his bank account, and he doesn't understand how the stock market works and things like this, and investing and things like this. And that's why they are trying to turn against these people, because they are seen as villain without them having done anything wrong. They just created companies which are very attractive for other investors, and the people want to buy shares in these companies, and that's why they are so highly valued. But they don't really have that money on them. They cannot go with a credit card to the ATM or to the POS and say, okay, now I want to cash out 167 billion. I'm bringing my suitcases and just fill them with the money or something like that. It's crazy to think this way. That would be it about taxing unrealized capital gains. My conclusion is, okay, Mr. Biden also spoke about the corporations, and one can say that, okay, corporations should pay more taxes. Of course, they are reinvesting, so it's very hard to ask them to pay more taxes. It's not very fair to have them in these fiscal paradises, and because the corporations are taking advantage of workforce, of infrastructure like Amazon, and using the roads and all the employees and the schools to which employees went before, and all things like this. So having this from moral point of view, the corporations are benefiting from what the society offers them. But when you are thinking at individuals like you and me, for example, the question is, if you are making X dollars and I'm making 10 times more dollars than you, up to which point is it fair for me to pay 10 times more tax as you are paying, while having access to the same public roads, while having access to the same education system, the same army, the same police? So probably if I'm very rich, I will not even use the public education system. I will send the kids to a private school. But that's a different story. Or to the public hospitals, I will send them I will go into a private hospital and things like this. So up from which point it becomes weird for somebody very rich as an individual to pay 10, 20, 30 times more taxes and to benefit from basically the same public services as everyone else. You don't get, if you are ultra rich, you don't get a private army, you don't get a private police, and it's the same public safety system is the same. The firefighters are the same. All the services, or the judiciary system, the prosecutors, everything is the same for everybody. So up from which point it's no longer fair towards the very rich people to pay so much tax while getting the same benefits from the public system? That's the question. Once again, my name is Alex Petrescu. Thank you for watching me. Please do not forget, if you like this video, to like it, to share with somebody that you think might be interested, to comment, and most important, to subscribe to my channel. You will never lose another video. I'm presenting quite often these days, basically on Tuesdays, Thursdays and Sundays. Also below this video you have links. You can create an eToro account and trade there without a commission or a fee, which is always a saving no matter how often you are trading. You have 2 links from Amazon, or 2 free audibles or audiobooks, or the Kindle program if you like reading electronic books. And last but not least, you have the wish list with all the software and hardware equipment which will help me improve the quality of my videos, also for your benefit. But let's say that is the most inconvenient for you. However, if you choose to support me like that, it would be very much appreciated. But the most convenient for you way to support me would be to just hit the subscribe button, to activate the bell notification, to receive the notification, and to keep watching all my videos. Have a good day. Bye.